This tutorial will walk through a complete client's case using the BetaVest CASE Management System. From data input to allocation simulation, optimizing the cash flow, optimizing the portfolio, and creating report output. We will use the sample case for John Dollar that can be found in the database that was installed when you first ran the software. We will begin by opening the client. If we were creating a new client, we would click Add New Client and then Open. However, since we are using the John Dollar sample case, we will select John Dollar and select Open. The screen that opens when you add or open a client is the client profile. This screen contains 9 tabs into which you will enter case information. However, a basic allocation simulation can be created by simply entering information for tabs 1 through 5. Tab 1 contains personal data such as name, social security number, birth date, and, if the client is married, spouse information. As we enter information into each tab, we will click Save to incrementally save work without closing the Client Profile dialog. This is useful for instances where you are interrupted during data entry and must leave your computer. In your absence, should your computer shut down or encounter a problem, you will not have to re-enter the data. Now we can move to Tab 2, Cash Flow Strategy, and we will begin with Client Income Need. The first-year gross income need represents the amount of money the client wishes to receive their first year of retirement. This is based on today's dollars and is increased up to retirement based upon the pre-retirement inflation rate that is entered to the left of the gross income need. The default value is 3.5% but can be changed based on your preference. The desired final portfolio balance represents a value that the client would like to leave as a legacy at the time of their death. The next section, Client Investment Timeline, represents the client's current age, retirement age, and life expectancy. The beginning age is automatically calculated by their date of birth. The retirement age is the client's desired or anticipated age of retirement. Life expectancy can automatically be calculated using the embedded actuarial tables. However, you may choose to enter these values manually, as it is prudent to estimate life expectancy at 5 to 10 years beyond the scope given by the actuarial data. Thus, you may uncheck the selection to use actuarial data and enter whatever value you like. Moving on to the client income options, we will initially evaluate 3 sample income scenarios. Option 1 estimates a yearly income increase based upon the stated income need. The default increase is 3.5% yearly, but can be adjusted to suit your preference. The concept we demonstrate here is giving our clients a raise in income yearly to adjust for inflation increases. Option 2 evaluates a stepped income increase. By default, we can give the client a 20% increase every 5 years. This means that for years 1 through 5, the client's income would be fixed and would then increase at the beginning of year 6 and would remain constant again through year 10 and so on. Finally, Option 3 is a percentage withdrawal of the total portfolio value. For example, if a client's portfolio value was $100,000 at the end of year 1, their income would be $5,000. Before moving on, let's click Save to save our work. It is not required that you do this, but it is highly recommended. Tab 3, Portfolio Values, contains the current portfolio values and anticipated future deposits. The Current Investment Portfolio section will contain the balances of the client's current assets. IRAs, CDs, 401ks, and brokerage account balances would be entered here. John Dollar's current balance is $500,000. Investments can be added by selecting this button and giving that item a title. Enter the amount, designate the item as qualified or non-qualified, and select Done to save the item. You will notice the item on the list and an adjustment to the total portfolio value. Should we like to edit that investment item, we will simply click on the item in the list and make changes to the title, amount, or we can choose to delete the item from here. Another important setting is the portfolio start date. This represents the date on which we entered into the client-advisor relationship and began to manage their money. In this case, we have made the portfolio start date January 1, 1995. Move to the bottom, we see anticipated contributions and deposits to the client's portfolio. These will be things like 401k contributions, IRA contributions, employer match plans, and safe harbor contributions. These will be entered by selecting the Add button. We will give the item a title of John's 401k contributions. It will begin at $5,000 yearly. Note that this is a yearly value and not monthly. It will begin at his current age and will go through age 64. The yearly increase percentage is the increased amount that John will contribute each year. Once these are entered, we select Done and see the item added to the list of contributions. Just as with portfolio items, we can modify an entry by clicking it, making the changes, and selecting Done. Notice that a lump sum pension rollover of $225,000 has already been entered. In this case, Mr. Dollar has been given the choice between a lump sum distribution or a monthly pension payment. He has selected the lump sum payment, which will be deposited into his portfolio upon retirement. Because this is a one-time payment, the beginning and ending ages are the same. Let's move on to tab 4, Income Sources. The Income Sources tab represents income that will come from a source outside of the client's investment portfolio. These are things like Social Security and rental income. Had the client elected to take the pension payments as opposed to the lump sum distribution, that would be noted here as well. Adding an income source is similar to the additional deposits that we have just seen. We will click the Add Income Source button, give the source a title, insert the beginning annual amount. Note again that this is annual and not monthly. The beginning and ending ages based upon the owner being the client or spouse, and the yearly increase percentage. As you can see, Mr. Dollar and his spouse already have Social Security entered. If we choose to edit or delete an income source, we would follow the same steps as described for additional deposits. Let's move on to tab 5, the Risk Tolerance Questionnaire. We will click this button to complete the Risk Tolerance Questionnaire, which contains 6 questions. For each question, you will select an answer and click Next until you reach the end. Once you have entered the 6th question, you will click Finish and will see the results of the client's responses to the questionnaire. As you see here, John Dollar has been identified as a low-risk investor. Now that we have completed tabs 1 through 5, we can click Save and then OK. This will close the Client Profile dialog and allow us to move on to the allocation simulation.